the bank.
Rates are good. Pretty exciting.
You know what? Right.
Free money. You understand what I'm saying?
Welcome back to the program. This is the free money segment of the program. Hittnergroup.com, HITTNER Group.com. 651-231-2500. That's where you get the free money. Give Kelvin a ring-a-ling-ling. What's going on out there in the money market, Kelvin?
Well, we were talking a lot of the show about financing and money and rates and all that. So let's just touch on a couple things here. First, median household income nationally. What do you think median household income is nationally?
Median household income nationally,
Yep.
80,000. I don't know.
Wait, any
Yeah,
ideas?
70s.
Yeah, 74,580, right?
Okay.
And then we were talking in Washington County, Dakota County. These are two counties here, in the Twin Cities are similar. That capture a lot of the, a lot of the market. You got the Woodbury-ish, that east side of town, south part of town. And you're looking at median household income there between 90 and 92,000, right? So that's good. But then we were talking in the earlier segments, in order to afford the median sales price, you need to make about 108,000. So we got about a $10,000 gap here that we're kind of missing a little bit. Where you kind of go, okay, here's what averages are here. Here's where income is, but the average that I need and my income are off, and that's why we're seeing some problems on people staying qualified for their home as rates go up.
Yeah, and the housing that would be available to them is just not on the market either.
Right.
Because people are just hanging out with their, high twos, mid threes interest rates.
Yeah,
a lot of making moves.
Yeah, a lot of the countries between twos is tough, right? There's only a few months in there where you could hit high twos, but most of the people are 3s to 3% to 4.5% captures a lion's share. Or take 3% to 5%. That's the lion's share of mortgages sitting out there right now. So I had a conversation this week with a client who is building, and they're like, oh my God, hey, we just looked at this package, just want to make sure, blah, blah, blah. I'm like, yeah, no. Yeah, shoot. Because now who knows, right? Because their home isn't going to get done until April of next year. Where will rates be?
8% by that time.
Well, you don't know, right? So I'd use a 7.99% 30-year fixed rate for them.
Sure.
And now it doesn't work anymore. And he's like,
financially it doesn't
financially,
work.
The ratio, the amount he's spending on his house payment and then his additional debt was too high to qualify because it was over 50%. So take your total house payment, principal, interest, taxes, insurance, and then your existing minimum monthly debt payments, which is the minimum payment on your credit card, not paying off the full balance.
These are back-end ratios we're talking about?
Yep.
You just had to get ratios in.
Everybody listens in for this stuff. So what you're talking about on your minimum monthly debt payments is minimum credit card payment, car loan payment, recreational vehicle payment, student loan payment. Even if it's deferred, I don't have to pay that. Yeah, you do. You do. Oh, by the way, in October, you're going to see what's going to happen next month as all these student loan payments now start to come in, and everybody's scrambling right now going, what do I do? Because they didn't realize that the $100,000 that they took out to go to college, quote, air marks, right?
Right.
They used that money to live on. And now that has to start getting paid back. So now you start adding all that up. That's on average between $800 and $900 a month for payments. And I think that's a realistic number, don't you?
Right.
Yeah, for sure.
So now you do that. Yeah. Back to the original point, you have this median home price,
and you're carrying
median income,
and a lot of
debt.
times people are carrying and accumulating more debt.
Right.
I know.
The way it is right now. So they're paying their credit card.
Yep.
But they're accumulating more debt every month on their credit card bills than what they're actually paying down.
Yep.
That's the reality of a lot of people.
I mean, you got to learn to live simply. I mean, one of the things I was out and about with some people, and we were talking about just like, and people go through different seasons of life, right? I mean, and we're talking about, okay, in this season, what does it look like? And everybody we're talking about, just you got to learn how to live simply, right? Just got stop spending money. Okay, this is our home. This is ground zero, right? And this is our base. And now let's be conservative on what we're doing. I know you listen to Dave Ramsey, and you listen to a lot of this stuff, and I do as well. And I'm just baffled by the calls that come in that just talk about how much debt people are accumulating. So just a word of encouragement to, we got to try and get people down to just a mortgage payment, right?
I try to talk to my daughter about that when she wants to buy a $12 Starbucks drink.
Mm-hmm.
Some of these things.
Well, it is. I mean, you stop.
just
Really,
like
it is.
$12
We sit here with
for-
coffee in front of us. But,
Yeah.
they don't call them Simple Senior for nothing. I just think that
Simple. Oh my God.
one thing that
You're the furthest thing from simple.
one thing I've learned over the years when you talk about living simply,
Yeah.
is that you spend a good part of the first half of your life accumulating things that you spend the second half of your life trying to get rid of.
Wow, that's good, right?
And
You haven't started that though, according
What?
to your home.
the getting rid of part.
Yeah.
Well, I don't know. I don't think we have that much stuff sitting around. You, I mean, I don't.
Okay.
Most of the stuff that I have is old, doesn't even work anymore. That's what's
Oh, don't talk about your physical body.
But that's so true. I mean, it's and there seems to have been this I deserve it. A lot of you shoulds. I should be able to, do X, Y, and Z and go on the big vacations and all that stuff. And it's like, well, really, why should you be able to do that? I could see that you would, save up for a vacation.
Mm-hmm.
Save up is the key word.
Right.
Save up for a vacation so that when you come home, you don't spend the next year paying
off for the next one.
Paying off the vacation that
No. Let's quick. So just an encouragement there for people: pay down your debt. Pay down your debt. Pay down your debt. Check everything you're doing. Check your credit once a year minimum, just to make sure something isn't lingering that you're unaware of. Personal situation, checked it, right? And my score was lower than I thought it would be because end of a lease payment, turning a vehicle back in, there's one payment that says we missed in 2022. I'm like, there's no way. So now I'm in the midst of battling with that.
Right.
And I didn't know. But now your score drops. You're like, doggone it. And that happens to me, So it happens to me. It can happen to anybody. So let's talk about the Fed meeting real quick. I'm just going to read this real quick. In simpler terms, the Fed doesn't think rates are too high right now. If anything, they might need to go higher. Moreover, they won't go lower until economic data really starts to deteriorate in a compelling way. Mm-hmm. Unfortunately, this morning's most relevant economic report didn't deteriorate at all. Weekly jobless claims were 201,000 versus the median forecast of 225. Actually, it's fortunate for the economy. Like, hey, this is good for the economy, but very unfortunate for real estate and interest rates, right? So the economy's doing okay in spite of the Fed, and that's what I think they're
that's
pissed,
really what
right?
it is.
I mean, they're mad. They're like, doggone it.
Yeah.
In spite of everything, people are going back to work. People are, doing all this, and so, yesterday, we're recording, on Friday here, but yesterday we pushed over 23-year highs now on mortgage rates. I mean, you're talking mid sevens, high sevens. If you have any dings on you're mid sevens right now.
And when they raise rates, if they say they're going to do one more rate, is that long-term rates that they're talking about raising, or is that the short-term?
It's short-term. It's the overnight rate between banks and the Federal Reserve. So but it does have an impact on what's going on, with us and everybody. It's been this way forever. It's harder to predict now than it ever has been. We used to be pretty good at it, right? That's why I'm always so confident. And then you realize you don't know anything anymore because it's
so if you're getting into a house right now, the reality is, from what I'm hearing everybody talk about, is that it's going to be a couple of years.
Yes.
That you're going to have to
survive until
25.
Survive until 25.
I really think that we're going to see it, that we'll stay in this level, right? Yeah. So we have to date the interest rate, but marry a home, right? So get into the home you want, but then just realize that there's some strategy, and there's things we can do. So, but man, more now than ever, right? When rates are in the threes, it's like
easy.
It's kind of, and I don't want to say, well, it's easy, anybody could, but, it's not that challenging.
Well, it makes life easier for the consumer.
Right.
For sure,
but right now, you need to have a conversation with me to know how to best structure this deal to get through the next probably 6 months to a year that we're going to be in this. So maybe it's a 1-0 buy down. Maybe it's a 2-0 buy down. Maybe it's a permanent buy down. Maybe we go interest only. if you have enough money and you put 20% down, we go interest only if you want.
Okay.
Okay, well, how would that look?
They'll give your monthly cash flow time to catch up
Yep.
with the economy.
Maybe, yeah.
Correct.
So there's just a lot of things we need to have a conversation about, and I love that part of this, right? That's why it was sometimes kind of hard with rates so low.
Right.
I mean, there's no conversations like,
Right.
what can you get me? Well, 2.75. Like, great. I'm like, well, we're not being thoughtful or strategic at all. But quite honestly, grab that rate and don't,
Right. And
But
don't ever
now-
let go of it.
I know, but it's tough because we're, we're
Don't
telling
ever
people.
let go of it.
But let's have a conversation. It all starts with a conversation at 651-231-2500. Again, 651-231-2500.
We're living in Jimmy Carter's stagflation in the housing sector. We got only an election will fix that. 612-627-8000 is the number to call. Hittnergroup.com, HITTNER Group. All one word, hittnergroup.com, and we'll be back next week.
You've been listening to your Real Estate Chalk Talk with the Hittner Group, the leaders of the #1 Coldwell